Good afternoon. You're watching Closing Trades on 80 Now. I'm Anisha Jain. With me is Aisha Faridi as well as Nikunj Dalmia in the studio. And for now, it looks like that ahead of Diwali, it's a bit somber as far as the market mood is concerned. It's red on the screen. As far as Nifty is concerned, in the last few minutes, there has been a bit of a dip. Sectorally speaking, actually, most of the sectors are in the red. The biggest decline is, of course, media because of Z Entertainment. Auto is also a bit of a drag. M&M numbers refuse to enthuse the markets right now. And after that run-up that we had seen yesterday of that 4% gain, today there's a bit of a tempering down as far as M&M is concerned. And even Bajaj Auto, TVS Motors, Motherson Sumi are some of the other drags. Rupee is at record low level, and one would have thought that it would at least put a wing under the IT stocks. That hasn't happened. IT continues to be a bit of drag. What's holding up okay, Aisha, is of course metals. So NMDC, Vedanta, some of your high flyers, and then energy basket is also doing okay.
Yeah, Hindalco numbers were impressive. So let's just check in on what that stock is doing. So it's pretty much a complete opposite of what you had in trade yesterday. So yes, Hindalco is not reacting to its numbers. The stock is now pretty much around the session lows, but a complete reversal in what autos were doing yesterday. I mean, same time yesterday, M&M, Hero MotoCorp, etc. were some of the top gainers on the index, and it's the complete contrast image today. Not performing for L&T, Flat, SBI, Bharti, Tata Motors, Reliance Industries, ICICI Bank. So it's the large caps which are doing nothing, and I think that's reflecting on the index. Having said that, I mean, there are a few dots of green at Tata Consumer, NTPC, ONGC, but that's really not going to move the needle for the index. Take a look at the broader markets, or rather the global markets as well, because there things are looking a little bit wobbly. European markets as well have retreated after Fed Chair Jerome Powell's commentary. So about a 0.5% dip is what you're seeing all across. I mean, in that sense, our show of resilience continues really. But yeah, it's 3 days of consolidation now that we are clocking. Kunal, nothing to worry about, is it?
Yeah, nothing to worry about, but nothing to be, I think even be pessimistic about the markets, because we are still trading into a range for the index. I think an 90 point range for the Nifty and a 150 odd point range for the Bank Nifty over the last 3-4 odd trading sessions. The market breadth has been very, very positive. I think that's the only good part about the market, that there are a lot of better options to try and trade, even if someone is looking at the mid cap and the small cap arena. Both the indices, the Nifty and the Bank Nifty, are apparently trading above the long-term moving averages so far. So maybe that could be a good comfort point or a support zone for the index. So that comes closer to 43,200 odd on the Bank Nifty and closer to 18,800 odd on the Nifty.
Okay, point taken. So that's a take as far as Nifty is concerned. But Nikunj, what do you make of this? One would have thought ahead of Diwali there would be a roaring rally, but seems like bulls are already in the holiday mode.
No, Anisha, we've seen a rally. See, the small cap index this week is up 2.5%.
Yeah, it's at record high.
Yeah, the Nifty, which was on the verge of a breakdown almost 8-10 days ago, where the concentration had moved from call to put and from long to short, we've seen a sizable comeback. Now we can not look at every day and then analyze it with a myopic glass, but in general, I guess it's been a good comeback from October versus November. And where you were at the beginning of October versus where you were at the beginning of the November, I think bulls have an edge. Today, because, technically markets are trading on Sunday, but that's like a Murat day, so you will not have institutional investors. Then you got a Monday which trades and Tuesdays are off. Folks in our office, outstation guys have already gone. Half the time you go outside, half the offices are working, have half capacity right now. So I don't think we should read too much into the price action as far as today's market action is concerned. But I think what we'll do now is, we've had a range of market shows. We've been meeting a lot of corporates, a lot of market guys, on the record conversations, off the record conversations. What is the crux? What is the crux of what we've seen this year in terms of the number one message from experts, from corporates? And if I connect the dots here, I think we need to discuss that.
Yeah, absolutely. And I think, the one big takeaway, Nikunj, from all our conversations across Madhusudan Kela, Prashant Jain, Ramdev Agarwal, Manish Chukhani, all of them has really been that the bull market in India is intact and it's not only dependent on FII inflows. I think that was the big macro takeaway.
And I think, that is the sum and the substance of the market right now, which is that, are we in a bubble or in trouble zone? Or are we in a long-term trend where the market and the earnings and the trend of the economy is going to be bullish? I think the answer I would say 10 on 10 is that the long-term contours of the bull market are intact. What are the long-term contours of the bull market? Solid macro, good corporate balance sheet, strong support coming from the government, reasonable valuations, tailwind coming because of what is happening in the global macro where India is benefiting, and in general the mood when it comes to confidence to spend and confidence to expand, and the positioning of India versus rest of the world. While rest of the world is crying for growth, in India there are pockets of abundant growth and pockets of decent growth. So the message I think which we want to bring out, and which I think is the most important message, is that the bull market in India is not over. The bull market is intact, and it may not happen next month, it may not happen next week, there could be volatility, but the trajectory of the market and the trajectory of the economy and the trajectory of the earnings, I think is very, very important, and that is on the up.
Yeah, and I think, the big call really also has been the fact that about the large cap underperformance vis-a-vis what the small and mid caps have done. I think every expert we've spoken with in the last 3 days has said that it's time to go cautious on small caps. The next lap of the rally is going to come in from the large caps.
Some are doing pranayam and explaining this, some are singing on the channel and explaining it, and some are Madhu Kela.
Yeah.
So he's trying to say large cap aane wale hain, small cap chale gaye. So everybody has a style of sending this message across. But I think, look, small cap as a category has added a lot of fat, and some of those overbought, over-owned, over-discussed stocks may see some weight reduction. But in the large cap space, which is what is interesting, normally it's the large cap stocks which move higher, then mid cap, then small cap. I guess in last 1 year, it's the reverse. The smaller you go down in terms of market cap, the higher the gains are. Small cap, SME versus small cap versus mid cap versus large cap. But the value, I don't think there is deep value, is in large cap stocks. Why? Because they're cheap, they're consolidated, there's compulsive FI selling. FI selling will reverse when markets will stabilize, interest rates will stabilize, and the margin of safety after 2 years of consolidation in some of the banks and other private names, I think is looking attractive. So what we are discussing right now, Aisha, in this Samvat year, is that small and mid cap stocks have had a brilliant year and SME stocks have really hit out of the park. It really may well be the reverse. It may really well be the reverse. I mean, markets may remain extended for some period of time, but I think by the time the year unwinds and election is going to be out of the way and we'll be preparing for the US election, world will be preparing for the US election, the lay of the land will be different.
Yeah, and our own elections as well, because a lot of experts are also saying as interest rates stabilize, as the election uncertainty gets out of the way, you will see FIs return back to the markets.
Yeah, so that's the tricky one to call, Aisha, depending on how you understand risk. And this is a view which we, let's say, got from Manish Chokhani, the $100 billion could come in. Just a coincidence, Madhusudan Kela actually said the same. Prashant Jain, same view. Navneet Manot, I didn't see the show, so I don't know his view. But
it's yet to play
out.
He said that the next 5 to 10 years, FI money will be back with quite a bit of gusto.
Okay, so everything, if you connect the dots here, thank you for that, Anisha. Everything you connect dots here, they're saying that flows will come back. Why will flows come back? Interest rate is like gravity. When they go higher, money always tends to move out. Now, markets have digested this move from 1% to 5%. And the stress test, I think, is over. So when rates will stabilize or rate will pause, money has to come back. Now it's a judgment call whether flows will come ahead of the election or after the election. If you come ahead of the election, then the entry points would be different. Or you come after the election verdict, then the entry points would be higher. But 2024, if all goes well on the election front in terms of a verdict what markets want, then we are looking at a real big floodgate of global flows which will come back. And frankly, I'll repeat myself if I say so that, okay, why India is on a pedestal, what is the unique advantage here, and why India has underperformed. I think you actually will see money moving out of China, how cheap it may be, but investing in China has been a miserable experience for everybody.
Yeah, and moving out of China even for manufacturing as well, right? And that's a big theme that has been emerging, China plus one. And I think that's the reason a couple of these big themes that you guys have identified in your chats as well is manufacturing, EMS, and the entire energy transition theme.
Yeah, so manufacturing needs no introduction. The advantage of India being Atmanirbhar, PLI, chemical manufacturing, electronic manufacturing, everything seems to be coming in. But what is that new industry which is going to get created? For example, when the software industry got created, the world did not have anything like IT services export. So what is the new profit pool which will get created? So according to experts we've spoken to, it is EMS. What is EMS? Electronic Manufacturing Service. Now whether it's making mobile phone or the laptop or the phone in my hand, can everything be made here? The world is becoming more towards AI and smartphone. It will use more technology, it will use faster gadgets, it will need more powerful gadgets. Apart from crude, the second biggest import for India always has been electronics. If that changes, then we are looking at a very different kind of phenomenon. To quote Manish Chokhani again, Suzuki comes to India, auto ecosystem gets created. G comes to India, IT sector gets created. Apple comes to India, EMS as a sector will get created. Now we may argue back and say, okay, markets are pricing in 2, 3, 4 years of growth. But what you have to, so in some of these sectors there is no business risk, but there could be a price stroke or time-wise risk now.
Yeah. You know, the other interesting thing also was the fact that, you know, if you are that tactical investor or trader, and you have that big overhang uncertainty around election, and of course soon after state elections as well, December beginning we'll start getting the results. Be cautious even on PSUs. They may have been the best performing segment from last summer to now, but if you have taken that tactical position, you know, maybe take profits off the table.
See, this is one sector where there's a binary risk.
Yeah.
If the current government comes back from a market standpoint, that is no news.
Yeah.
But if there is a change in what the markets want, then it could be a risk of policy, change. That policy change is something which always be a huge risk for a sector which is largely going up because of policy and because of government spending. So that becomes more like a binary event. We also bear in mind that while PSU stocks were cheap, they are no longer cheap, and some of the PSU stocks are trading at P multiples which even consumer companies are not commanding. Next 6 months, as the general election date rolls out, the decision making is not going to be stepped up, it's going to be stepped down. So a lot of these businesses which actually markets get excited every quarter, order book, inflow, new order, new port, new ship, new aircraft, new missile, all that will stall, and then that will create a vacuum. So a delay in decision making, which is a natural process of cycle, and also the election uncertainty are two events which in a sense may just take the zing off the table. The long-term trend for defense and railways I think is intact. It's a snowball effect which will kick in. But when the train leaves the station, it does not reach its destination without any stoppages. So there may be some stoppages.
Yeah, absolutely. But I think the other bigger emerging theme, and when you talk about when will large caps move, what within large caps will move, I think the consensus broad call is bet on financials. Because even if you're not betting on EMS, even if you're not betting on construction, infra, manufacturing, all of it can be played via financials.
You know how ironical it is. 2 years ago, Aisha, on the same channel, when we spoke to everyone, they said, just go for, the market positioning was private banks are holy saints, and PSU banks should be avoided. Now it's the reverse.
Complete reverse.
So markets have this there's one thing which is permanent in market, what Howard Marks has taught us is mean reversion and the cycle. I think the cycle in private banks could come back. Some of the private banks, HDFC Bank, HDFC Bank, Kotak Mahindra Bank, they've gone back to levels which are pre-COVID. 4-time book has become sub 2-time book. For rest of the world, you don't know what the book is. It may be available at half the time book, but in India at least you can judge the book value. So you are looking at the sector which is doing well. The compulsive of FI selling, if it reduces, then there could be a deep swell or a trade or a comeback at least in large cap stocks. And large cap banks I think are looking cheap and they're just getting right for a correction, so to speak. Banks have this unique thing, we call them as secular, but they are the biggest cyclical trade in India. 2020 bad year for banks, 2021 poor year for banks, 2022 good year for banks. So cycle hai. I think 2024 could be the cycle for them.
Talking about cycles, real estate is in a big up cycle. Seems like it's coming out of a decade-long slumber, and the conversation suggests that it's likely to continue.
From Chris Wood to Madhusudan Kela, I think Ramdev Agrawal also told Aisha, Prashant Jain, not a real estate expert, but he said, look, I like the theme, what has been playing. And Nisha, when the real estate sector is in some kind of an bull run, then we are looking at massive wealth which gets created. Because real estate goes higher, demand, supply, everything.
The multiplier effect that it has. Yeah.
So some are saying, okay, you buy real estate stocks. Some are saying you buy real estate derivatives. Some are saying that you buy real companies which are into real estate financing. So really depending on what your understanding is, you have to look at this cycle is in an uptrend. And with real estate, it's a 5-year bear market and a 7-year bull market. I think that 5-6 year bear market is over. The 5-6 year bull market is about to start. The challenge in the real estate space, what we spoke to everyone is, HFCs are not doing as well as they were expected to do well. So it's a very unique positioning. Soaps are selling, shampoo is not selling. Oil is selling, SUVs are selling, entry level cars are not selling. Luxury bikes are selling, but basic bikes are not selling. Luxury houses are being sold, urban housing is being sold, but low cost housing is just not selling.
So that rural comeback is yet to tickle.
Exactly. It's like this K, which we all been discussed. I think if you have to put a letter which identifies India's character of economy in this samvat, I think it's the letter K.
Letter K, because luxury is definitely one thing which has been doing well, and of course the entire urban theme and premiumization has come out as one of the big trends of summer 2079. But those were the top takeaways. We have been speaking to a slew of those experts, and you can catch all of that conversation right here on ET Now, as well as our social media handles across Facebook, LinkedIn, Twitter. Take your pick. It's pretty much everywhere, even on YouTube. But for now, we'll sip into a very short break. Don't go anywhere.
Back with closing trades right here, ET Now. It's getting a little wobbly out there, but as we step into a new samvat, ET Now brings you a whole host of market insights to decode what's in store for the new year. So this Diwali, get ready, tayar hokar aiye, and stay tuned for a very special programming. And talking about special programming, here's some lip-smacking treat for you. We at ET Now bring you one with a twist. Startup icons Vinita Singh of Sugar Cosmetics, Nitesh Mitter Sen of Nazara are here to battle it out in this special cookout edition.
Are you ready to battle it out for a cookout? You're making some yummy pasta. Let's start off by you guys telling me about what's your favorite Diwali food.
For me, favorite Diwali food is usually all the Indian food that you make, right? All the heavy. So you fast for 1 week before. You fast for 1 week before Diwali, and then you have whatever
that you can
have
hog at Diwali, yeah.
What about you, Vinita?
I love all Delhi food. I grew up in Delhi and Diwali is huge there. So like chole bhature and rajma chawal, and then of course lots and lots of mithai.
So what would you say, guys, is like the recipe to success? Because I know that I want to talk a little bit more about how you guys started out, which I will do,
Yeah,
but what
sure.
according to you is like the recipe for success?
So for me, I think I call something called 3 Ps.
Okay.
I think for anything, the starting point really is passion, right?
Yes.
But if you have passion, you need to persevere. So perseverance is.
Key.
So for me, it's been just persistence.
How do I
not
just take it
giving
like
up.
this?
For
You have some
like
pills?
15 years, I've been a founder and had a lot of failures. But I think the only thing that failures are not fatal. So if you just hang in there,
That's our
keep
quote for the
showing
day.
up.
Failures are not fatal.
Yes,
Great.
keep showing up.
Yeah.
And I think if you have to build something for decades, you
Yeah.
have to enjoy what you're doing. So
Okay.
it also comes back to, being
Passionate about what you
passionate
do.
about what you do. So I think, as long as you have a
Not just
lot
mix
of
it, no?
love for your
Yes, sir.
consumers and patience,
Yeah.
in India, the opportunity and the market is so big and so fast growing and so versatile that I think anyone can really build something great.
This is what Nitish has presented, his Alfredo fusilli pasta on green vegetables and
parmesan on top.
capsicum as well.
I added parmesan already.
It's all my gaming practice.
All your gaming practice. Maybe we'll
Thank
give that to you. And Vinita, oh, look at this garnishes and all. Maybe she's really gunning
Yes,
for
I'm gunning for the first
winning
place.
this, putting this on top, making it look super fancy. Maybe we'll add like some basil leaves.
Yeah.
Is that a good idea,
Yes, ma'am.
chef? This is me helping you.
Thank you.
Wow, that's definitely kind of tantalized our taste buds as well. So Diwali festivities, and we did have some interesting lunch at our offices as well. So of course, that also adds to it. But nonetheless, we have Mantesh Sabrad also joining us on the show. Mantesh, hi, good to have you on the show. Thank you so much for joining in, and and wishing you the happy Diwali as well. Let's start by discussing Honasa and Mama Earth as well, because we're on the topics of startup, and the entire passion, perseverance is what we're talking about. So looks like this stock, of course, listed around that 330 rupee mark, had an issue price of 324. slipped below the 270 levels, and now a big note coming in from Jefferies initiating coverage with a 500 plus target.
Good afternoon and happy Diwali to all of you and all the viewers. Yeah, Mamaearth has been a kind of disappointing kind of debut on the stock markets. But this is one company where I have my doubts. If you look at its balance sheet, for example, there is a lot of accumulated losses coming out of actually past issuances of stock. And if one were to do a straight analysis of when are these past losses likely to erase, it's probably 3 or 4 years down the line. So that's one basis for my negative outlook on a stock like Mamaearth. It went through this valuation challenge even before the IPO came in, right? They had to scale down their IPO size and valuation as well. So to me, the stocks that come to the IPO, the moment they are overvalued, they'll go through a long process of consolidation even before they really think of rising. But fundamentally, I think what we are looking here is that the balance sheet needs to be corrected.
I think the street also is pretty split and divided on how they're going to actually, bring in the profits and bring in the growth. I mean, forget what the stock price is doing, but just the business per se.
So Aisha, look, they've made a brand. Now, how do you take the brand big? I mean, I never thought exactly a year ago that Zomato will turn profitable. And within that, Blinkit will turn profitable. They have a large revenue which is coming from spend of advertising. So there's a different way consumer brands were created versus there's a different way in which how consumer brands would be created now. And since you've taken company public right now, you know that markets will ultimately look for free cash flows. If you're able to get just one brand right in a market like India, you don't know, what magic it actually could create. All I know is that there are good brands which are getting created in the last couple of years, and some of those brands will challenge, the incumbents. I mean, Patanjali is a clear case how they challenged everybody. So this really, there are a lot of, in the near term, yes, you may say that, okay, where are profits and market cap is 10,000 crore. But 2-3 year, Mantesh, my sense is that if they're able to just, take this brand higher, maybe focus on the niche category, what they are working on, cut their advertising expenditure, make it more online, they may just hit a sweet spot.
Situation for most of these consumer brands, the moment they drop the consumer spending, advertising spending, the brand valuation simply slips. You have to have a targeted brand presence throughout the life, and it's not just a 2-3 year phenomenon. To me, not only is spending a big challenge for a company which doesn't generate free cash flows in a humongous amount, and also here you have a company which starts with actually a fractured balance sheet. So it's very difficult. The old timers, even Patanjali that you talked about, it had its run, but it didn't have a sustainable run, right? It started off very big, hit a large turnover, but it's somehow unable to reach that sweet spot in terms of profitability. And unless you hit profitability, you will continue to revisit that catch-22 situation. You have no profits, but you still have to spend to maintain your brand presence. So I think that catch-22 situation will remain for a brand like Mamaearth, Patanjali, or even some of the other brands that are making out, trying to become big right now.
Did you get a chance to look at M&M's number? The street seems to be disappointed by the margin performance. Your reading?
I haven't looked at the M&M number per se, but then the outlook seems to be very clear that they've had this fantastic run on the tractor side of the business, which brought in good amount of profits in the past a couple of years. So the tractor slowdown is now imminent. Plus, now you have a situation where they have had a good run on the new brand launches, particularly on the XUV sides, which is now slowly fading out. So I think more than the result, which is backward-looking, the forward-looking outlook for an automobile company like M&M, even some of the other automobile companies, is looking a bit challenging because you've not yet transitioned into a fully electric kind of market as yet, and people are the old ICE manufacturers, the IC engine manufacturing companies will find it tough to transition this phase. So it's for the automobile companies, it's going to be a tough transition space. I think my M&M will also go through that challenge.
That's the take coming in on M&M. In fact, we'll be chatting with the management on the other side. But let's take a quick break before that, and we'll be joined by Dr. Anisha very shortly.
Closing trades right here on ET Now, still in the thick of earnings. So let's address another set. We've got with us Anisha, the MD and CEO at M&M, joining in on the show. Anish, hi. Great to have you on ET Now. And firstly, festival greetings. Wish everyone at M&M a very happy and prosperous Diwali from all of us.
Good afternoon. It's great to be here, and let me reciprocate the greetings for you and all your viewers. Wish everyone a very happy Diwali.
Thanks so much. Anish, let's talk about the quarterly numbers, the bread and butter business, and tell me about how the auto and farm segments have panned out, and especially farm, because, you know, the monthly volumes do indicate that there continues to be a dip in the farm segment. When do you actually hope for a meaningful recovery? When do you see that coming in?
So first, the auto segment has been going great guns. Profits are up 2x for the auto sector. The farm business has seen some toughness from an industry standpoint. The business has actually delivered very well, gaining 150 basis points of market share, which is obviously very difficult to do when we are at 40% plus. But despite that, they have done it. What we do expect is for the year, the industry will be flat as compared to the prior year. Our initial view at the start of this fiscal year was that we'd be in the low single digit in terms of growth, and therefore we're sort of moderating it down, not by a huge amount, but we don't expect any significant declines in the industry at this point.
Good afternoon, Mr. Shah. Nikunj Dalma also joining in. When you say you are moderating your outlook for the industry, are you specific about the automobile industry here?
Nikunj, thanks for clarifying. This was specifically in response to the question on the farm industry. So the farm industry or the tractor industry, we expect that to stay flat versus the prior year. The auto industry is growing well, and for us, it's really not a question of industry growth. It's about the demand, because the demand on all our models continues to be very high. Our order book still is at 286,000 units. And that has stayed at that level despite us being very close to doubling capacity. So we are just continuing to see a very strong inflow of orders, and therefore for us it's how fast can we ramp up capacity even further than where we are today, and thereby continue to bring our wait times down.
Your read so far of the festival season, because what we have with us is the data which auto companies share with us on a monthly basis, but that is the wholesale data. The on-ground reality, at least in small towns, is that inventory pile-up is happening. The on-ground reality is that there is a bit of a churn and a bit of a struggle in small towns.
So on that, in auto, Nikunj, as I said, we've got 286,000 outstanding orders. And therefore, any inventory on the ground is just there because a customer is waiting to pick it up on a specific day, in some cases on Dussehra or Dhanteras or Diwali. And that's the reason the car is waiting there for them. If a customer doesn't want to buy it, there are many others who have lined up who want to buy it already. So we are not really seeing any inventory build-up from vehicles not being sold. What we are basically seeing is customers waiting for a certain time period. And given the order backlog we have, we really will not have any inventory build-up.
But Dr. Shah, also wanted your sense regarding the margins, because the street seems to be a bit disappointed about it. I just want to know from you directionally, given that, you know, the commodity prices are coming off, there are other tailwinds as well, do you expect a northward bias going forward when it comes to margins?
So margins have gone up in the auto business by 200 basis points. In the farm business, they've come down slightly versus the last quarter, and that's because typically Q1 is a peak quarter. Q2 in this year did not have the season, the festival season as part of Q2, and therefore with lower volumes, the operating leverage will take margins down. Those will be recovered, and on balance, we do see a positive trajectory to them. There will continue to be certain seasonality factors, certain one-offs that come in, but the secular trend is going to be positive.
For Mahindra and Mahindra in last 3 years, reallocation of capital, focus on profitable businesses, scale them up, and then you've hit out of the park literally when it comes to your SUV new launches. So large part of the operating leverage benefits and capital allocation benefits have kicked in. So what happens next now? I mean, do you think large part of the recovery and the repair and the margin expansion has already happened?
So here, Nikunj, we've looked at various areas of growth, and our growth gems have geared up for 5x growth. Today we talked about 3 of them, where Sustain is going from 1.5 gigawatt to 7 gigawatt in the next 4 years, and it already has won bids in the first half for totaling about 1 gigawatt. So it's on a very strong track, and we may even over-deliver on that commitment. The electric three-wheeler business has gone from 5,000 units in F21 to 74,000 units, which is what it will close this year at, almost a 15x increase, and has ambitious plans going forward. As we look at real estate, we've gone up 3x in terms of our residential sales in the last 3 years, and have plans to grow a further 4x from here in the next 4 years. So these are businesses that are going to drive growth. In auto, there is still a huge runway because we've got our born electric vehicles coming in. We have the new 5-door Thar that's going to come in, as well as a new Bolero. And these are models that are exciting models and will continue to generate the kind of demand we've seen. So we are on the path of continuing to increase capacity in auto. We will continue to see operating leverage. On the farm side, farm machinery is a segment of significant growth, and we will look at international as a key driver there as well. So we've got a lot of levers, and for us the key is to make sure that we continue to execute very well.
But you know, Anish, we're coming on the back of huge outperformance in your stock, and I'm sorry to correlate it to the way your stock prices move, but I mean last year alone you jumped up about 50% in the stock. Year to date, you've already jumped up 22%. We're sitting at 1600 plus per share on the stock price. Where is the next big alpha generation going to come in from? Is it going to be SUVs? Is it going to be exports, doing more of the same? You know, where do you think the next big leg of the up move will come in from for your business?
So first, I would thank our investors for having the confidence in us. Our approach is to ensure strong execution. What we have committed to is 20% or rather 15 to 20% EPS growth and 18% ROE. Our job is to deliver on those commitments. And in terms of growth drivers, we do see them across our businesses. Auto, it's around electric vehicles and some of the new models we're coming with. Farm is farm machinery and international. Mahindra Finance is continuing the trajectory of its turnaround. We are halfway through that right now. We've got to get to the other half. Asset quality has been very strong, as we've shown. And on TechM, it's initiating that transformation or the turnaround that we need to do for TechM. So these are 4 big growth drivers. And then you add to that a 5x growth challenge for our growth gems. That's not an easy target to meet. And these, I think, are a very good set of drivers. But as I said, our job is to continue to deliver and continue to meet the commitments we've made.
2,500 or 3,000 on the stock then.
As I said, our job is to deliver what we have to do. The rest is left to the investors and the market.
I actually track the IT sector closely, so I'm quite intrigued by the comment you made in the press conference, Mr. Shah, that Tech Mahindra will take almost 3 years to turn around, because Street was hoping that once Mohit comes on board, there would be a quicker turnaround, but realistically, 3 years is the timeline we should look for?
So first, it is for Mohit to come in and make commitments, and I cannot do that for him. What I explained in the press release as well, or the press conference, was we will see two aspects. One is getting back to normal, because right now you're seeing some element of cleanup one-times from the past acquisitions that have been made, etc. So first, getting back to normal will not take too long a time. Beyond that, there have to be structural changes to be able to come in and outperform, or first get to industry average in terms of margins, and then hopefully outperform beyond that as well. And for that, I want to be realistic. Right? That's not something that can, we can't sort of wave a magic wand and make that happen. There has to be significant structural change in making that happen. With Mohit coming in, with Atul Soneja as the Chief Operating Officer coming in, and the leaders that we have at TechM, we feel that we can make that structural change to have Tech Mahindra outperform its industry, and that will take time. So come back to, we need to make sure that we're making fair commitments, and then we need to hold ourselves accountable for delivery.
Mahindra Financials to turn around. It's got one of the best franchises, one of the best access to capital market. The Mahindra brand, access to low cost is something which others struggle for. You don't have that challenge. But the turnaround has just been prolonged.
So here again, there are some things that moved faster, and there are some things that do take time to put in place. So let me go back to the commitments that Mahindra Finance has made. First is asset quality. For us, GS2 plus GS3 was 21.9% in Q4 of F22. Today it is 10%. And that reflects GS3 of 4.3%, down from 10% plus, and at one time it was 16%. So these are numbers that are very, very strong numbers, and a very stable level now that Mahindra Finance has reached. Credit losses have come down significantly as well, though you would see some volatility in profits in the short term, because provision releases last year were not repeated again. And as you come down to a certain level, the curve flattens out and you would not have significant provision releases. So that is one thing that has to be built into the explanation for what has happened from a profit standpoint. But if you look at the underlying business, the asset quality has undergone a very structural change, and you will see the benefits in credit costs as you go forward. The second aspect there is digital transformation. It's about using data and technology in a very different way than we've used before. And that transformation is something that I would say is again halfway done. There are a number of very tangible benefits we are seeing from there. One example is 70% non-cash collections. But in terms of how we interact with customers, what we offer customers from a digital standpoint has undergone a sea change. But we still need about a year and a half to be market leaders in that. And for us, given the strong franchise we have, we've got to combine that with very strong use of tech and data. And that again does take some time to put in place. The third is to look at diversification. Again, great work done on that. The SME portfolio has grown well. We've got a lot more of the prime segment that we had talked about, and that's again driving down the GS3 numbers. And finally, strong partnerships with India Post, with SBI, with Bank of Baroda, as we look at co-lending opportunities. These are all things that have put the business on a much better track. And in some cases, yes, you do need a little bit of time for it to play out in terms of the final outcome, and that's what we are doing at this point.
The viewers, that what a sea change has been in Mahindra and Mahindra in terms of perception and in terms of what markets are now really giving it the true positioning it deserves. P's have expanded, market cap has gone up, businesses are coming back, return ratios have improved, and the guidance what we get from Mr. Shah and his team, I think, is incredible. So last but one question, Mr. Shah. You raised money in your EV portfolio because you wanted to set a benchmark, and then the second capital raise was done even at higher level. You spoke about growth gems, and what understanding is that you're growing them, but you're not ready to make them public. But before you take them public, would you be doing benchmarking in terms of fundraising, which is that from your growth gems in the next 6 to 12 months, we will get a lot of news on how P investors are coming in, how benchmarks are being established before you take them public?
So the answer to that is yes, we will look at benchmarks. We do want to take our growth gems public as well at the right time, because we need to get them to develop to a certain level of scale. Our approach has been to partner with marquee investors who can add value for us. We don't go out looking for investors, and it's therefore a great position to be in, because many of our investors who've come in already want to do more with us across our portfolio, and we have some of the best in the world with British International, with Temasek, with Ontario Teachers, with IFC, all of who've come in, and that is something that we cherish in terms of the partnership with them, and they add a lot of value to us in terms of how we think about our businesses.
Last time, but you did not give me a clear answer, which is that if you have to travel urgently and if there's no Mahindra car available, you would say you rather would wait instead of going on some other car. But if there is one model of Mahindra car which you would always use, which one would that be? I mean, which is your favorite Mahindra model? That you can say Bolero or Thar or XUV. ये तो बता सकते.
So again, you're asking me, Nikunj, to choose between children as to who's the favorite child, right? That doesn't happen, right? You can't say I like my right hand better than my left hand. These are all great models, right? If you when I drive the Thar, it's a huge thrill to drive the Thar. The Scorpio gives you a completely different presence on the road. The XCV 700 is one that drives fantastically. And whether you're driving or whether you are being driven in that car, it's just a great feeling overall. The Bolero is outstanding in many ways. So this is a question, Nikunj, I can't answer. Right? I can't choose between children.
Editor, we're giving you the easy way out.
Yes, can you repeat that? I didn't quite catch that.
No, I said so that let's stick by the first option that Nikunj gave you. If there was no M&M car available, since you can't choose your favorite amongst your children, choose another one.
Well, thankfully, I haven't been in a position for a long time when there was no M&M car available. So it's one that I'll have to cross the bridge when that comes. But at this point, I would still say that, look, I would look for a Mahindra car at all times.
Questions, but this one you cannot dodge. 15th evening, would you be at Wankhede Stadium for the first inning, for the full match, or just for Toots India bat?
Uh, 15th evening, I will be at Wankhede Stadium for the full match and completely rooting for India. Would love to see India have a resounding victory and then go on to the finals and win there as well.
So before we wrap, how about we say it all? Jeetega bhai jeetega.
Bharat jeetega.
That's the spirit. Jeetega bhai jeetega, Bharat jeetega. A wonderful year ahead, Mr. Shah, and thank you for joining us.
Yeah, thank you very much. Pleasure being here with you.
Okay, so that was about the conversation that we had with the M&M management, talking about that there could be a bit of scale back versus what they expected at the start of the year for the tractor business, but the auto business continues to be firing on all cylinders, and so does the rest of their gems as well. Quickly taking stock of what's happening in the markets as well at this point of time. As far as the Nifty is concerned, there is a bit of a spike that we are witnessing in the last few minutes. So just as we head into Diwali, there seems to be that last leg of rally which is coming in. We are past the level of 19,400, and the Bank Nifty too has managed to surge almost 145 points. Let's also go across to our technical experts as well as Sunil Subramaniam, who's joining us on the show. Kunal, first up, as far as this 19,400 move is concerned, what do you make of this sudden rally?
Yeah, I think a good pickup of price action. Maybe I think it's the start of buying which happens generally pre-Diwali. The Nifty coming back about 19,400 mark, but I think more importantly the Bank Nifty making a stride back about that 43,800 mark. What I like about the structure is the way many of these large cap names, like for example Axis Bank, IndusInd Bank, etc., are making a comeback for themselves. Even HDFC Bank is showing a marginal pickup of price action, although not any kind of a breakout. But I think if this trend persists for another couple of days, then we may probably expect even a psychological break of 44,000 for the Bank Nifty.
Okay, Sunil Subramaniam as well joins in on the show. Sunil, hi. Good afternoon. And firstly, wishing you a very happy Diwali from all of us here.
Happy Diwali to all of you and to your viewers too.
Right. Sunil, the consensus call from all the market experts we've been speaking with, and some veterans rightfully so, is that watch out for small caps and mid caps because they've run up quite a fair bit. You need to turn a little bit cautious and maybe have a higher allocation to large caps. Is that a call that you would also take?
It depends on the time frame in mind. If you have a 5-year view, I don't think so. I don't think you need to change because while they are looking expensive today, I think they are factoring in huge growth in the EPS as the business cycle turns upwards, and I think that will play out. But if you have a 1 year to 2 years outlook, then perhaps it makes sense to reallocate because as all markets go, it's a flow-driven market and there will be ups and downs. So I think from a longer-term India story perspective, I think you don't need to worry about your allocation at this point.
That's about the Nifty right now. But in the meantime, just pull up the chart of HDFC Bank and Axis Bank because these are the two heavyweights which are actually putting some weight behind the Bank Nifty right now. So HDFC Bank almost 0.5% gain and Axis Bank is the other one. Naresh, quickly comment on the charts of these two stocks.
So Axis looks more promising compared to the other names. In the banking space itself, the stock is very close to the previous all-time high, which was closer to 1,050 levels. So the stock has made a strong recovery after going back below 1,000 levels. So Axis could be the leader in the large cap banking space along with IndusInd.
Right, okay, just looking at some of the other buzzers as well in trade. And while Anisha just flagged off, it's some of the large cap private banking names which are leading the recovery. The power story as well is going very strong. So we've been seeing as to how PFC, REC have been chugging along very nicely. That was the case yesterday. Today, too, PFC has made a dash of about 4%. There's Vedanta going strong, about 4.25%. NMDC has made a move of 3.5%. And MCX and Oro Pharma as well are seeing some good momentum play by. Both those stocks holding up in excess of 3% as we speak right now. Sunil, what are the big tactical calls now for the Samvat ahead? Many say that it's EMS, manufacturing, real estate, and private banks, which are yet to make a comeback. Would you go with any of these themes?
From a next somewhat perspective, I would put my weight behind the consumer discretionary pack. Because manufacturing, while the numbers will begin to look good, a lot of the good news is in the price. So if you're looking from somewhat to somewhat, right, I would expect a reallocation of capital away from the manufacturing space into the consumer discretionary space. Because that space has not seen as much capital inflow because of the whole focus around manufacturing. So I think some amount of reversion in there will happen. And probably over somewhat to somewhat, I would place my bets on consumer discretionary as showing a better growth from the current levels than manufacturing.
In the meantime, let's take a look at some of the other broad-based names which are actually perking up. Captain Point is up 8%. Global Health is up 8%. Vijaya Diagnostic, Action Construction. Honasa Consumer is actually now up around 6%. MCX post their con call is higher by 6%. CDSL, and the list is really long. A lot of these stocks actually doing okay. It's Senco, which is down 5%, Z Entertainment, Concord Biotech, and then United Spirits too, languishing in the red. Sunil, of course, we also got that SIP data just like yesterday, right? That another 17,000 figure coming in. Looks like that the flow of SIP is not ebbing, and it continues to tilt towards, broad-based themes when it comes to the sectors as well.
I was looking at a breakup of the SIP book, of 17,000 crores, and I saw that 30% of it is in mid and small cap funds. Another 30% is in multi-cap funds. So what this means is that it gives a lot of buying power in the small cap and mid cap space to fund managers. Hence, I would say that the buying in the small and mid caps of good quality stocks would actually go up. So actually it augurs well. The second reason why the SIP book is consistently going up is because naturally retail investors, do look at past returns, and the better returns on small and mid cap has driven them to this. The good point is that the distribution community, the mutual fund MFDs, are actually shifting lump sum allocations into SIP because they are conscious of the fact that valuations are quite high, and you stagger it over the period of the next 1 year at least, it should give you a good rupee cost averaging. So I would compliment the distribution community on this breakout, and this is what is ultimately going to give support to the small cap and mid cap space despite valuations being high, because good quality small caps and mid caps can still get buying power and rise even higher over the next year.
Right. Great to have you on the show then, Sunil. We let you go, and festival greetings once again from all of us here. Well, this Samvat, we also bring you another reason for our viewers to smile. And as we step into Samvat 2020, here are 80 stocks that brokerages and some of the biggest market voices are recommending right now. Vinny is here. She's been compiling that list, and she joins us with the consensus names. Vinny?
Hi, good afternoon, and absolutely this list is surely going to bring a lot more smiles to our viewers' faces as well. 80 stocks for 2080 somewhat as well. And first one, let's talk about some of the brokerages. We have Kotak Securities that has picked out some of these large cap names, you know, whether you look at a Reliance, Cipla, Godrej Consumers, Macrotech, all these big names coming in, and other brokerages also. We're seeing a lot of large cap names, you know, that are shaping up as well. When we're seeing actually large cap not doing that much, but yes, large cap names coming in terms of individual stock names. We have something coming in from the EMS front as well. Sirma SGS is coming in on the list of Anand Rathi. Other than that, we have DLF, M&M, TVS Motors, IDFC First Bank, all these interesting names coming in for Anand Rathi. Other than that, Nirmal Bang too, picking out some of these finance names that have come in, and NBFC sides as well. So let's keep an eye out on that. Axis Securities also has picked out HDFC Bank after its mergers. TVS Motors again making it to the list as well. And from the mid-cap IT space, we have KPIT Tech. Let's move on and then talk about some of the other names coming in from Nirmal Bang, I believe. And that one is actually, look at the names that are coming in as well. Some of these NBFC names have shaped up as well. And other than that, we have pipe names like Venus Pipes. That's making a debut today on this list as well. Venus Pipes coming in on the list, 34% upside, and surely a good upside that is expected in most of these stocks as well. Exciting to see the list coming in from JM Financials as well. We have retailers like Titan coming in. We have from the infra side L&T, banking name like an SBI there, from the pharma space as well as the auto. So varied base of data coming in from this one as well. Let's move on and talk about some of these individual names other than HDFC Securities list of some of these pharma names. We have exciting names that have actually come in from these some of the individual names as big market voices as well. Whether you look at someone like a Pankaj Murarka also, who's talking about some of these three important stocks that he highlighted. One is from the new age tech name. He believes Paytm, that's a good growth story that we could see coming in there. Mid-cap IT name again, a Birlasoft, and a PNB Housing Finance also he finds there's a lot of value in this one as well. So yes, PNB Housing making the list of Pankaj Murarka. Vinit Bulanshkar too highlighting Marksans Pharma, Zomato as well as Wellspan India. And Zomato is actually going to be making a list of other players as other market voices as well. That's going to be the one to watch out for because Zomato is there on the list of a lot of players. Deepan Mehta too highlighting Ujjivan Small Finance Bank, Viatech Wabag as well as playing that rural story and the water story that is working out. That is a story that he believes in that one as well. Let's move on and talk about some of the other names that have come in from Sandeep Sabharwal as well. From obviously the AC player Voltas, he believes there's a lot of potential in terms of growth here. AB Fashions is in terms of the retail side, he believes there's a good upside of around 40 to 60%. And in the aviation space, we have only one of these major listed players, that is Interglobe Aviation, that's making the list as well. And lastly, let's just talk a couple of more names coming in. Sanjeev Bhasin has highlighted top names over there as well. From Tata Steel, Hindalco. Other than that, you have even Paytm making the list of Sanjeev Bhasin as well as something like a Vodafone Idea and Reliance too remaking the list. So these are some of the names that are surely there on most of the players list as well and voices list, as well as Rahul Chedda too highlighting in terms of names coming in from the healthcare space as well as in terms of the realty players. Some of the realty players he's highlighted as well, and like I said, Zomato making the list again. Samir Arora too highlighting in terms of Zomato as well. So again, a consensus word coming in mainly on Zomato as well. And from our techies, our special techies, Kunal Botra as well as Nuresh too highlighting important names coming in. When you look at Kunal's list, there is obviously a Maruti Suzuki, Canara Bank. From the NBFC side, there's L&T Finance, Texmeco Pipes, all these interesting names. While from Nuresh also there are Mukund, Indusand Bank, EIH Hotels as well as Walcott. So yes, a great list that we're seeing coming in on this front as well. Other than that, obviously we have other names that will be coming out as well. 80 stocks that we are watching out for in terms of the list. Let's pull up the other charts as well quickly, and we'll see that list of 80 names coming in from them as well. Whether you see from Naresh, there's a walk card as well. So yes, an interesting list of 80 players.
Okay, that's a whole host of stock ideas coming your way from all of our experts we've been speaking with on the channel of late. Let's just in the meantime take stock of how we are shutting shop for the day. So because you did have that minute bit of recovery and rebound which played out, we're closing in the green actually, so not bad at all considering it's once again a very narrow band that we've been played in. But remember, at one point in time, we were down about 0.5%. So from there, it's been a decent recovery, led by ONGC, Bajaj Finance, Tata Steel, Axis Bank, which recovered, and somewhat Reliance, SBI, ITC as well, broke into the green along with HDFC Bank. But that's pretty much it. Pre-Diwali, we'll catch you again on Sunday evening with the Muhurat session.